Hi everyone, today is Thursday, November the 4th, 2021. Happy Diwali to all my Indian friends. Today actually I was going to talk about a completely different topic, but this morning when I was having my morning coffee and listening to Maneko 64's daily, I could call it a daily briefing. In the last 2 minutes of his video, he spoke about sort of how he has structured his portfolio of miners, and he does talk a lot about like giving doing your own analysis, looking up an ETF, but then seeing what their holdings are, and doing your own analysis. But I felt like many people don't know how to do their own analysis, and because I am trained in fundamental analysis and I have my MBA in finance, and that's what I was trained to do, to study financial statements. And so I wanted to talk a little bit today about how to actually look through an ETF, try to pick things out, etc. Okay, so because I do some of it as well, and more recently I do a lot more of it than I used to, because I think, as I mentioned in another one, when I was getting my MBA, my professor Meyer Statman, absolutely brilliant guy, pretty much had the same advice as J.L. Collins did in his book The Simple Path to Wealth, which is, live off of 50% of anything you earn, or any of your income. Live off of 50%, and from that, the remaining, whatever you're comfortable with, dollar cost average into a broad-based index fund like VTSAX, which is Vanguard's total stock market fund, or VFIX, which is Vanguard's top 500, the S&P 500 fund. And I used to do that for a while. However, this year the market has broken down so badly from a standpoint of fundamentals that I know that I could still gain, quote unquote, in doing that, but I don't think it's safe. So this is how I pick stocks, if you will, and I will talk specifically about miners to take the discussion that Mario began. I will take it forward. So what you do is, you first look up the ETF of your choice. If you're interested in uranium, it is URA. If you're interested in the S&P 500, I look up VOO, or just Google S&P 500 holdings. This is all very publicly available. If you look up miners, I would suggest you look up GDX and GDXJ, because those are the gold miners and the gold mining junior, the small cap companies. Because if you're more aggressive and you want more risk, you can you want more risk and potentially more reward, then you should also look at GDXJ's holdings, and then likewise the silver miner and the silver J. So what is this silver one? I don't know the silver ETF. I don't know, because I don't do I don't think I have any silver mining stocks, where the seniors, juniors, producers, I know nothing much about silver. The only silver space that I play in is PSLV, and physical, but I'm not really a stacker. I just, if something is beautiful and cute or whatever, then yeah, but I don't, otherwise I'm not too much of a silver gal. Anyways, so I will focus sort of on GDX and GDXJ. as a proxy for how to do this in general, and you can apply this quite a bit even to the SLJ or whatever, silver miner ETF. So what you do is you pick the sector that you're interested in, even if it's energy. So say like energy is VDE, Vanguard's energy. And yeah, I'm kind of more biased towards Vanguard, and there's a reason for that. I don't get sponsored by them or anything. I've been a customer of Vanguard's for over 2 decades now, or maybe just about 2 decades. And I like Vanguard because they don't serve two masters, in the sense that when you have a fund with Vanguard, it's not that fund has to be profitable to pay the family that owns them or whatever. You as an owner into the fund also owns a piece of Vanguard. So that's why whenever I say any ticker things that are not URA and GDX or GDXJ, they will mostly be Vanguard tickers like VOO, VDE for energy, the banking one, whatever else. So what you do is you pick your sector of choice, GDX for this example. You Google it, you figure out not just top holdings, but what the holdings are. If you just look up the first few, it'll say top holdings. The problem with looking at it that way is that if you just see the top few, it's usually the top performers. And I don't like to pick the top performers. The reason is, and you may say like, what? Why? You want to pick the losers? No, I don't want to pick the losers. I just don't want to pick ones that have already had their run. Because what is the point of me picking something that has gone up 50% in the past year, and then after I buy it, it goes down 30%, right? So that's why I'm not interested in picking the top performers. And oftentimes, like, there'll be many columns in that. It'll be, so what I do is I download, and so the way you download it, like from Google, you just do a right click, and you can export to a table, to to like an Excel, or to Google Sheets, or whatever the numbers if you're using a Mac, or even that even Quicken or whatever else if you're using like a paid software sort of thing. But you export it to some sort of thing that you can move things around in. And then what I do is I look at the headings, which is so some are by percent of holdings, then some are by how much they've grown, etc. Then after I sort them per what I'm interested in. So also I use a platform called TradingView. Now you may say, gee, TradingView, is that not for technical analysis? Is that not for like day traders? Sure, but you don't have to use TradingView just on a short-term for short-term things. The views within TradingView, you can see by the minute, by the hour, on the 2 hour, on the 4 hour. However, you can also see on the monthly how something is doing. And so what I like to do is I like to put the whole sector ETF name, so say like GDX in this example, I'll put it into TradingView, and I'll see on a monthly, is it going up, is it going down? The RSI, which means on the lower side of TradingView, like you'll see like a green going up, red going down, green going up, red going down. When the red's down, but it's kind of started to go up into the green on a monthly, that's good. That's when I think, okay, this sector is hot. This is a sector I should be looking into. And mind you, it's on a monthly. It's not on a very short-term type of basis. So now if I know, or if based on that, and you don't have to go monthly, if your time frame is shorter, you can even go weekly. But the point is, make sure that you know, sorry, is it RSI or MACD? Maybe it's the MACD. It's the green thing on the top, red thing on the bottom, kind of. You know, you can't miss it once you see it. If you want to know more about it, go to a channel called J Bravo. He posts every afternoon around 4 o'clock California time, and watch any of his videos. You'll see which one I'm talking about, at least visually. Okay, so now suppose I've determined that ETF, that sector, is in an uptrend on a monthly or a weekly, like on a slightly more long-term basis, right? Then I will go into the specific holdings of that ETF. Then I will see, you know, okay, who has performed really well, and what percent of holdings. Because sometimes also the percent of holdings, if they've not adjusted that, you know, if they've not adjusted, or sorry, if they have adjusted it and the percent is small, it's the one that has run a lot already, and that's why they've tapered their own weighting of that particular asset. So in that case, you know, I know that, okay, this one is, you know, it's had its run, so to speak. I will sort of look more in the middle to see, you know, who has some room to run. Because after all, like, I don't want to pick someone that has already had their run. I don't want to pick someone who's a complete loser, right? And who they may be on the process of dropping off their list, but it still happens to be there. So, and then once I do that, then I will do more research on them. I will do, I'll put their ticker into TradingView. I will see, you know, how that specific company is doing. Like if they're like in a consistent downtrend, I won't waste my time looking at their financials even. But if they are, you know, they're relatively stable, then I will look at their financials. Looking at their financials, let's see, there's a actually this guy did a really good video that came out yesterday. It's on the Palisades Gold radio channel. I forgot the name of the guest, but he was like a young guy, and he was talking about like gold is going to have its turn or some title like that. Anyways, the date of the publish is November 3rd, 2021, and Palisades Gold radio channel. He did a really good, not technical analysis, but he did a really good, he spoke about how his fund, how they analyze the cash flow statement, etc. How they take, you know, what cash flow a company has, but then they have adjustment markers, and he was quite specific. So watch that, because he's really good in how he explains what they do, and he gives like a really good example too. He's like, well, so suppose you have this company that, you know, they suddenly have a lot of cash flow. Should we go for them? But then you discover that it's because they did not pay their suppliers and they did not pay their taxes. It's like, oh well, duh, no wonder they have more cash flow. So you don't just go based on a simple like a news header or whatever, or like just one line item. So the things you want to analyze are the balance sheet, the income statement, the cash flow statement. What else? You should read the footnotes, because that really speaks of materiality and material events that happen. From a strictly miners perspective, there's a man by the name of Doug Casey. He wrote this really good book called Surviving Fedcoin. In that book, towards the very end, he gave these like 9 principles or 9 P's or something of investing in miners, and he says, you know, people and whatever, I forgot all the other 8 P's, I'm not remembering. Politics, maybe one of them, because in mining, jurisdiction is very important. If the company that you like has a bunch of mines in a place that will like just take over the mines and say you're out, then so what if they have like a great deposit, but they lost the mine. But the one P that I remembered that was that I frankly I believe in that one, like for any other security, not just for any other asset, I should say, not security, because I don't think much of these are securities in the true sense of the word. But people, one of the P's was people, and I think people is the most important factor. And so when you're researching a company, yeah, sure, look up the financial statements, and the things I would pay attention to are how indebted they are, and obviously the less debt the better, in my view. And also sort of in some way how politically connected they are, because sometimes if if a place has like horrible debts, but they are like systemically important, politically, etc., then, well, it depends whose game you want to play, but but people, the leadership team, their track record, how good they are, how accomplished they are, yes, but in my view, their integrity level is very, very important. And I go so far as to then Google the leadership team one by one, everybody on that About Me or About Us page. I will Google them and I will look them up, like as a person, what are they like, not just their accomplishments, even sort of what as much as I can find about them. I think it, well, that may be a little too far out to, in terms of a financial analysis, but that's probably why I want a doctoral in psychology, and because I am far more interested in a person's way of being, and how they think, how they work, and what traits of themselves they're bringing to that company. So so that's how I would go about stock picking, if you will, specific stocks from an index sort of basket of different stocks. So maybe I was not even as detailed as I would have liked to be, because I felt like when I heard that statement, by Mario, and I really appreciate, he posts every day, to have the discipline and the commitment to post every day and have something, something of value to say every day, which he does, is really difficult and is laudable. And so I think that's really terrific. And so when I heard that bit about like analyze them, do your own research, I was like, but how? Some people don't know how. And I hope I was slightly helpful here. I know I wasn't as detailed as I could have been on like this was obviously not a class on financial statement analysis, which is something, if you have the opportunity to take, even like a one course thing, or these days on YouTube you can learn so much. Jay Bravo is his channel. His name is not Jay Bravo. I guess Jay Bravo is a cartoon character. I have no idea. I don't know. I thought this guy's name was really Jay Bravo. But anyways, he posts every day, and he is a high school and a college business teacher, and so he actually teaches this online for free on YouTube. Jeez. He also has courses that he sells, but you can also, if you don't if you can't buy his course, I would say he's a good person to listen to and learn from every day. Yeah, I think that's about all. Okay, well, thank you for listening, and if there's any other kind of questions you have, comments you have, but yeah, more questions that you have, if you want me to expand on this topic any further, feel free to let me know in the comments, and thanks again for listening. Bye.